Right, this is a topic that a lot of students do struggle on, substantive tests. Now, what you've got to realise is you're testing the accounts directly. Here I say I'm testing a balance directly. We find balances on our balance sheet, on our statement of financial position. So for example, something like PPE, and it says in the accounts PPE is worth 100 or PPE is in at 100. We've got to test that balance directly when doing substantive tests. So we've got to check, is that 100 valued correctly according to the accounting standards? Does that 100 PPE actually exist? Is that 100 actually complete? And do we actually own, or are they our real PPE, property and equipment? We call all of these things assertions. And so when we're doing substantive tests, that's all we're doing. We're testing these assertions. Let me explain further. Let's say it was an income statement amount now, a test of the transaction directly. So revenue is in at 100. Well, we've got to think to ourselves, is that valued correctly, that 100? Does that sale actually exist? Are all sales in there? And is it all in the right year? These are the assertions. We need to test those assertions when doing substantive tests. Now, in textbooks, when they talk about the income statement amounts, instead of saying, is it valued correctly, they'll say, is it accurate? And instead of saying, do they exist? They'll say, did they occur? It's just English, but don't have to worry about that. Okay, so how do we go about testing these balances and transactions directly? How do we make up substantive tests? Well, we'll talk about how you do it in the exam on a later video, but you've always got to have the assertions in your head. So, for example, if we want to test that that revenue did occur, what we've got to do is we've got to take a sample from the actual accounts. So something in that 100, take a sample, let's say it's one item. So we go from the sales nominal ledger, which will be 100, we'll take one item in there, and we'll see that should have a invoice related to it. So we'll check that invoice. Now, if there's an invoice, there should have been a goods dispatch note which we give to the customer. You know, it's gone out of our warehouse, it's now there. So every invoice should have a related goods dispatch note. And to have a goods dispatch note, there must have been a sales order in the first place. So if we can check all the way back from the accounts to the sales order, we know that everything in sales had a sales order. So we know that that sale did actually occur. Okay. Compare that to, are the sales complete? Is everything in sales? Is every sales order in the sales nominal ledger? Well, that way then, you've got to check the other way around. You've got to go from the sales order, so take a sample sales order, say, right, where's the goods dispatch note on that? If it's been dispatched, then we must have invoiced the customer. And if we've invoiced the customer, we must see it in the accounts in that revenue 100. We check in. Does every sale order end up in the accounts? If it does, it's complete. Okay, so can you see they go in opposite directions? Occurrence, you go that way. Completeness, you go that way. So did it occur? You go from the accounts all the way to the source document. And for completeness, you go from the source document all the way to the accounts, okay? And that will become more natural to you the more questions we try, which we'll do later in the course. So what about accuracy? How could you test the accuracy of the revenue? Well, you could just take a sample invoice and recalculate it for discounts, for VAT. You could check that the price list was right, you know, what we're charging on the invoice was correctly transferred across. We've done occurrence, we've done completeness. The only final one is cut-off. Is the revenue in the right year? Well, we only charge revenue when we dispatch the goods, when the customer gets the goods. So any goods dispatch note, they go into revenue as long as they were dispatched before the year end. If they were dispatched after the year end, they're next year's sales. Simple as that. Okay, so we've been talking about transactions. I want to do all of this again now with balances. And can you remember we had that PPE 100? How would we check that that 100 is valued correctly? Well, if it's valued at cost, we'll be able to check the cost to an invoice, wouldn't we, that we bought it for. If it was revalued, we'd be able to check the revalued amount to maybe an expert's report, because that's what's often needed when you revalue something. How could we check that the PP actually existed? So in the accounts, that 100, there'll be what we call an asset register with all the assets, that 100, with all them listed out, an asset register. Well, how can you check that those assets in the asset register actually exist? Well, just go check them. Go from the asset register and then go physically inspect the assets. So, but how can you check that all the assets are on the register? Well, go from an asset, take an asset and then say, show me it on the asset register, just the other way round. And then finally, how can you check that we have the rights to that asset? Simply check the ownership documents. So that's the general idea with substantive tests. You're always testing assertions. What we'll go on to do is see how we give another technique for doing this in the actual exam and to make sure that you get the full marks. But if you just think of the assertions, you will always score the full mark.